This week, the Bank of Canada held its overnight policy rate at 2.75%. This is the third consecutive rate hold by the Bank of Canada, and although widely expected, the underlying message from the central bank remains clear. Uncertainty continues to cloud Canada's economic outlook. In Wednesday's meeting, the bank cited ongoing instability in US trade policy as a major factor, and the consensus seems to be until a clear agreement is struck between Canada and the US, the Bank of Canada will likely keep rates where they are. So what does this mean for real estate? Well, it means a lot of the same as we've been seeing throughout 2025. Buyers still remain cautious, and many will continue to remain on the sidelines because of this uncertainty. Homeowners that are facing renewals may be faced with slightly elevated rates, as they may have been expecting rates to be a little bit lower than what they're seeing on the renewal paperwork now. That said, our local market is not heavily leveraged, so don't expect a wave of desperate sellers to come to the market, at least not in the short term while people are still gainfully employed. The real drivers continue to be emotional. Uncertainty, instability, and speculation are the themes throughout 2025, and we're continuing to see those play out. We'll continue to watch closely and monitor all of the developments happening between us and our neighbors to the south. But until a deal is struck, the Bank of Canada doing anything with rates seems to be quite unlikely. That's it for this week's real estate update. Thank you guys for watching, and see you next week.